Let me start by saying I'm on dangerous ground here because as I was going through the research on electricity demand and AI, I realized that this is going to be a lot like the comments around crypto and AI, where you have the people in one camp that say it's not a problem and the people in the other camp that say it is a problem. So let's just start with that. And I'm not an expert here by any stretch. I'm a student in this area, and I'm trying to figure it out. But the numbers are pretty staggering. We'll go through some of them. But according to Piper Sandler Macro, U.S. electricity demand is projected to grow about 1.5% through 2030, and our long-term growth rate was around 0.4%. But with the advent of generative AI, it looks like these projections are going to be too low, and people are talking about 2.5 to 5% growth rates in terms of energy demand as compute power continues to rise. And you have demand growing even faster in the rest of the world than it is in the advanced economies. And the drivers for the electricity demand are really the crypto data centers and now NEVs, and data centers with AI is even a bigger kicker on that. So you can see this is the chart from the IEA, and they're projecting that you could see a doubling of electricity demand between 19 and 26 because of these three cases in their high case scenario. But even in their base case scenario, you're looking at really a move from 500 to 800 terawatt hours. So it's a very significant change that they're projecting going on. And this chart just shows you where it was in 22, traditional data centers and crypto, and now you're looking at the AI dedicated data centers in 26, and you are starting to see it in their base case, a significant increase in energy demand. And you're having big money flowing in terms of CapEx to the data centers areas globally, and you're looking at projections of getting to 500 billion by 2027. So you're really talking about significant capital being directed to this area for all the reasons that we talk about all the time, and the reasons that you'll hear from the folks next about where we're going with AI. This chart just shows you the change in electrical generation by power source, and you can see obviously renewables in the last couple of years are picking up in a much bigger way, but really pretty strong net change in terms of the growth rates, and also you can see the shift away from coal to renewables. But I think you're going to see a bit of a flattening out of this shift as we go, because it looks like we're moving to a little bit more balanced approach right now. This looks at the change in demand by region, and this is actually fascinating. That the advanced economies in the year-over-year change are only going to account for 15% of the electricity demand increase, with the bulk of it coming from China, Southeast Asia, and the rest of the world. Not much coming from, and India, not much coming from the advanced nations. These charts show you electricity demand, population growth, and electricity per capita for the US, for China, the EU, and the US. And really the red line is China, and you can see electricity demand on the left going up quite a bit, population growth curving down, peaking, yet their per capita consumption really on the rise, where the US and Europe are a lot more flatlined, although per capita consumption in Europe is on the rise. But interestingly, when you look at the rest of the world, particularly Africa, Southeast Asia, and India, you see a very different chart for where increased demand is coming from, and the power drain that's going to be on those systems, as well as pretty significant population growth, except in Southeast Asia, but certainly Africa and India on the upswing. And then again, the per capita consumption on the rise there. But I believe the per capita consumption in Africa is offset by the population growth rates that are keeping the average electricity per capita at a more level number. But obviously there's big demands being pulled from the system. But as you look at who wins and who loses, because that's really part of what we're here for, is we look at where the opportunities are, and there are some areas that are less obvious. And one of the big ones is copper supply and demand has a big imbalance projected even prior to the advent of generative AI being what it is today. And we were looking at going out to 2035 or 2030, a 4 million ton supply gap prior to generative AI coming in. So that's one area that you could see significant supply and demand imbalances. And this just looks at the long-term supply and demand outlook. And you can see just one area on the curve, or one area of the supply chain that's essential for the powering up of the grid. Copper in big shortage and big opportunity there. So when we think about the world as it is today, I think the three biggest non-macro forces are AI, low-cost EVs, which are going through their evolution, and then the weight loss drugs and what they're doing. And you think about the changes that those three are making on the global system, and really it's things we weren't talking about too much 5 years ago, and now they're top of mind and a big part of the change that's going on. Then I think the advent of AI will go into all the different industries and making the changes, and medicine is one of the big ones. I think in the background too, we're all worried about the inflation fight. I think inflation is being managed now. I think it's going to be higher than people have expected, and we've talked about that for some time, which means rates aren't going to come down quite as much. I think the latest number from the street now is they're looking at 65 basis points of cuts this year, which is lower than what the Fed's projecting. And at the start of the year, they're at 100%, 175 basis points of cuts. So clearly the market is adjusting to their expectations to be more closely aligned with the Fed. And I think that has big implications for asset values. And I think we're getting to the point now where whether it's the private markets, the public markets, you're really looking at the reality of this rate environment, plus or minus 50 basis points as to where we're going to be for some time. And I think that will have a big impact on how you're valuing businesses going forward. We still are positive on the markets and the economy. The consumer has been quite strong. I was wrong on that. They're stronger than I thought. What I missed was the 75 trillion of assets the boomers have, and as they're moving into retirement, they're still spending. And I also missed on the low end that the stimulus that put through put them in a much better position than they were before. So they're going to continue to spend very heavily. As we look at the world today, we still favor the U.S. over the rest of the world from the equity markets and from the capital markets overall. Much more in favor of active over passive. The trades have gotten too crowded and everyone's chasing the same names. Growth over value still, although there are value opportunities, I would just say in the value area, be careful of the deep value that doesn't have the ability, the balance sheets to make the investments in growth and productivity improvements, because I think they'll be left by the side of the road. And therefore, we favor strong balance sheets, free cash flow, and price inelasticity over, and that's what we're looking for in characteristics of companies today. So we have a big energy problem. We can solve it. I think you'll see new power sources, and I think one of the ones that will continue to get a pickup in discussions is the nuclear area, and whether you're doing the small modular reactors or finding new ways to power these massive data centers that are going to be less politically and socially problematic will be a big part of the story going forward. So I'm going to stop there, Mark, and let the experts talk about what they're seeing in the area, because it was really hard to find good data on where we're going, and much less where we've been. So let's stop there and open it up to questions and comments.
Questions, comments?
Hopefully it's more in the comments side than the questions.
Andy Fish?
Yeah, I've built some small models, numbers on crypto versus AI power consumption are like up by a factor of 5. Just give you 2 simple examples. Inflective AI was one of the first startups, $1.8 billion launch. They just bought NVIDIA H100 boards and gave them to CoreWeave. But they just folded, by the way. But I built a model. If you just took the H100 boards for single startup, that's 12,000 homes worth of electricity. And then it's really about training. You have to separate training from data centers. So I was reading a Y Combinator blog where someone's talking about they train their AI 23 times without success. So a lot of the processing is really all about training. And so the good part is you can separate the data centers that do training from the ones that are sort of ChatGPT real time, have to run all the time. So there's an opportunity to do some creative investing in the data center space by segregating AI power usage into different components.
And also looking at other elements that go into the process, like as I mentioned, the materials sector and the steel sector and others that are less obvious plays, but certainly still plays in the space because you can't do it without them.
Yeah. Can I make a couple of observations? So I feel like,
Can you just introduce?
so firstly, Shahid Azim, co-founder CEO at C10 Labs out of Cambridge, Mass. We're an AI venture studio and a venture fund focused on building and accelerating AI innovation, sector agnostic, closing our first $100 million fund now. So that's our intro. So just a couple of thoughts. So one, I feel like we're like literally in the trenches, seeing some of these dots connect. So really, really interesting comments there. I'll pick a couple of themes. One, this GLP-1 opportunity, I think it's obviously massive. If we can, if some of the early publications actually it's almost like the miracle sort of molecule for the US healthcare system, which can sort of cut all sort of, a lot of the data that we're seeing, it's having really positive impact on cardiovascular health. A lot of the massive sort of budget line items as far as US healthcare cost structures are concerned, that are directly connected to this single molecule. So I think if the data plays out the way most of the players are envisioning, this can be a massive shift. So that's one thing. And there's an interesting overlap. One of the core opportunities where AI can actually sort of unlock a lot of value here for the GLP opportunity is to provide evidence in large-scale clinical trials around the underlying mechanisms of action, which is really sort of still a little bit of a mystery. So we have an active program under consideration where we're going to apply AI specifically at the intersection of GLP-1 and, as I said, really sort of bringing to light the evidence of the underlying mechanisms of action, which is a pretty big deal. The second comment I'll make is also on the data centers and energy consumption. So we've been, that's also a significant area of interest. And also the dots connect, right? So it's AI, energy consumption, and are there players out there that are reimagining this whole full stack, right? All the way like controlling the infrastructure, the service layer, where the energy is coming from. So I won't name the company, but we're looking at one of the first very exciting zero net carbon footprint, where they're looking at where the energy is coming from, all the way to like AI layer that sort of creates efficiencies around at a grid scale, and then having full stack data centers that are completely reimagined and very, very exciting. And it's actually a first real shot at taking on some of the top three sort of big boys in the industry in Europe. So from the trenches, I would say what you just said, I can totally, the dots connect.
So what Andy said, though, I'm curious because the training of the data seems to be where a lot of the power, it's like 40% of the power needs come from just the training.
Yeah.
And it feels like a lot of people are going to waste a lot of time and energy on data that's not worth even training on. So is there a productivity process that you go through to train the data to, sort through the bad data from the good before you get into it? Is there productivity improvements you're making there?
I can't speak to the specifics. I'll make a macro comment. The answer is yes, there are. So this is obviously a big deal. And there are, so one of the opportunities around LLMs is that, you're not, in machine learning, you're looking at training data and things like that. When you look at where the direction of things, you're not going to require the same level of data to train these because you have basic infrastructure is going to be there. So it's like, do you still need these massive fiber cables around the world? No, you put them in place. The plumbing is in place. Now it's like building the application layer, which allows you to capture value. So I think already we're seeing techniques and directionally initiatives where I'm not sure it'll sustain at the current levels.
I want to keep, if you don't mind.
Barbara had a question.
Yeah, a couple questions. Barbara, you're up. You have to unmute. Just unmute.
Actually, I'm off mute. Can you
Yeah,
hear
you're
me?
good. Yeah.
I actually had a comment because I am in the energy space.
How so? Just introduce yourself again on that.
I'm Barbara Bickham. I also have an advisory company that helps companies with the same 5 things that I said in the fund.
Yeah.
But I work in oil and gas. And so in the energy space, we're looking at multiple ways that we're using AI from a supply chain side, from a material side, from a automation side as well. So it's not just we're building data centers and now we need all this energy. Energy also requires batteries. So you talked about copper, but you didn't talk about lithium or anything about the storage pieces. There's a lot of batteries that are using AI to be smart. There's a lot of things happening in this space of energy and AI to help with the efficiencies, also distributing energy across grids and things of that nature. Are you going to do microgrids? So there's a lot of things that needed to be, well, that weren't quite covered, but were kind of said and not said at the same time. So I wanted to throw that out there.
We've been talking about those other subjects from time to time, so we're mindful of them, but good that you bring it up again.
Yeah.
Did you have a question or comment on top of that?
No, that was my comment.
That was a good point.
You're right. We were also invested in MP for the rare earths, for the batteries as well. So all the commodities in that food chain are absolutely essential. And unfortunately, it leads to a whole nother discussion, which is not much of them are manufactured or refined here. And that gets into the whole geopolitics of our relationships with China. So you're dead on. I didn't want to go down that rabbit hole.
Well, I just got back from Latin America. Latin America has one of the largest lithium deposits on the planet. So we don't have to think of always be dependent on China for everything, which, China does have a lot of stuff. But then there are other regions in the world that have things as well.
Yeah, Barbara, where are you located?
Yeah, I'm in Los Angeles
Okay. Coming to you.
today.
All right. Mark Jarvis with the Queen in the background.
Yeah, I got to get that changed, Mark. It was more of a comment, really. I just think there's been a recent article about Ireland where there's huge investments in Ireland because of the very favourable tax situation for data rooms in particular, and WhatsApp, LinkedIn, Google, everybody's there. Indeed, a law firm I do some consultancy for has had to open an office in Ireland because there's so much work there. But 30 to 35% of Ireland's electricity is being used to push data room activity. And they're even worrying about brownouts now and stuff like that. So it's quite an interesting play as to what you need to do to cater for your customers that you brought in. And then the other comment I was going to make a bit was about the UAE, which of course is the environmental side of things, where data rooms are all over the place. Bitcoin miners are all over the place. I have a friend who lives in Dubai who mines Bitcoin in his back room while he's at work because electricity is so cheap. And guess what's fueling the electricity? Oil and gas. So a bit of an environmental
So on
challenge.
a good news front, speaking of not Ireland, but Iceland, a former Anderson colleague and Price Waterhouse colleague, we moved over, is building a cable, almost like a frictionless cable from Iceland into the UK. And I think Ireland is next. And that's all wind. That's not oil and gas. But they can only handle 5 to 10% of that, of the capacity. So it'll still be a bigger issue, but it's at least a dent.
Mark, it's interesting, the IEA called out Ireland in their report. I had a slide that I took out that showed the percent of data centers as a percent of energy consumption in the 30% range. It was actually pretty staggering for a country that small, that much power to be going one spot like that.
Other
Indeed.
comments, questions?
And assuming effect that we take care of it.
Sorry, we have a technical, physical issue, building security.
Okay.
Oh, yeah, we'll get them in.
Right. Other comments, questions? Oh, Andy, hand up. Now, if you put your hand up, you have to lead a deep dive on whatever you're talking about.
I did part A, but we can do part B. No, to Ray's example of creative solutions and Steve talking about training. So there's a company in Texas. There's just one example. I'm not telling you guys to invest in it. They're in Texas and they set up basically an AI machine that does training. It's connected to the grid, but only to the wind. So what happens is when the grid is taking wind power, it actually shuts down, doesn't do anything. And when there's excess wind in Texas frequently, so the grid will just stop taking it and the wind turbines aren't doing anything. They will start then taking the power and start running all the training models in the data center. And you're not obviously going to get your training done quite as quickly, but the electricity cost is exactly zero. That's microscopic because the grid in Texas prices it by the minute. So there are things that can be done that are creative that even people in this room can do. Yeah.
We've talked about storage. Barbara brought it up. We talked about it with Hank. And what's the industrial scale storage solution set?
Well, we talked about it a bit, is that there's been way too much focus on the technology for cars, which is highly concentrated, lightweight, where grid storage can be heavy, it can be cheap, it can last longer. So that technology is just coming along in several forms. Even things like iron oxide batteries don't even use lithium. Or a little bit away. So there's a lot of stuff, Mark, and it depends on what you want to store the energy for. I even saw a brick, believe it or not, a brick storage system. This just stores heat. So just bricks. And it's high tech, by the way. So there's all kinds of creative solutions, but the battery tech is coming. It's there. It's coming very, very soon.
Well, as I said, if you're going to ask a question, you have to lead a deep dive. So we'll expect another deep dive from you soon on this.
Let me know, and I'll apologize to Patricia Rahe. I was the guy calling them as she's getting on the airplane flying back from Europe to do the deep dive the next day.
You did 2 in a row.
I'll try
Thank
not
you.
to do it that way.
Anyone else? we are going to just, we're going to transition to two things, and you're all invited to stick around, including the lunch, where we have a tradition wherever we are, and we sometimes do it virtually, and we'll do it. There are 3 rounds of introductions. It'll start at 12. With like who you are, the city you're born in, live in, where you want to go tonight. If I give you magic wand, magic carpet. Then we're going to talk about fun fact or what scares you about AI or what excites you about AI. But before that, very soon we're going to transition to sort of like a level set ourselves from a little different perspective on AI with the benefit of the C10 co-founders. But before we transition, just any more questions? I guess we're more of an electricity, although maybe Shay, you can keep speaking to some of these same themes. That should be part of what excites us about AI. Any other comments, questions? Hello, Sophia.
Hey, Mark. Yeah, great chatting briefly yesterday and with Stephen too. It's a question thought. There's something related to the energy that really struck me right around AI, because we're exactly exploring something of a taxonomy to support the investment landscape. And I thought of oil first and how we've created industries and a whole grid and infrastructure that supports so many cars and fossil fuel vehicles and an entire infrastructure. And we didn't have the information that we have now. And it is as if now for the energy industry or for the AI industry, the information is already available as to the impact of what we are doing, right? So just one particular tangible example was if I have to choose between an investment for understanding the energy demand, am I going to invest on more AI for AI's sake, or maybe for knowledge databases and all these things? Or am I taking energy away from maybe a hospital at a place where someone actually needs a lot of that energy, right? In a way, so things that were initially kind of separated, like children's care and then hospitals, and then AI all of a sudden get connected by this energy demand layer, which adds this level of complexity because now my portfolio is entangled, it's connected to each other. So I'm wondering if if there were to be a taxonomy, if there were to be some way of tagging investments as to how they would relate to each other, or how much energy perhaps they would demand, I wonder if that could be something that could be useful for the investment landscape, that then investors will be able to take that into account. And energy is only one, right? There are so many different quote unquote externalities, or now we're seeing the demand, the supply and the demand side of things that might take away from one priority and kind of advances tremendously in another. So just these thoughts.
Or even just being aware of how people are going to score things differently, but just having that toolkit. Anybody want to speak to that, or is that a good segue to the AI experts?
Is there an AI phone?
I was going to say that, but it's a little trite.
That's the one you would have an AI one for.
It's true.
It's like a blockchain.
I mean, a couple of different tacks we could make. We could either go straight into AI. Usually before we would do a deep dive or a roundtable, we have everybody introduce themselves and answer those questions. So we could go either way.